other topics we want to get to, so we'll pull you in earlier. So the second topic wanted to discuss was really around what the impact of a global crisis has. Right, there are many fallouts and changes and systematic shifts from a global crisis. For example, the single-family asset class was created out of the last subprime crisis, financial collapse back in 2008. New legislation was written and implemented, whether it's TRID or RESPA. Lending standards were tightened up. Dramatic shift in the industry. So here, really want to hear your thoughts on what do you see changing or coming out of the current pandemic, even though the impact is different. It's at a global scale. So would love to kind of hear what your thoughts are on what the shifts are taking place, or what do you expect in the coming quarters. And Alan, maybe if you want to jump in.
Sure. So we've seen a number of different things happen over the last really since March. Maybe I'll just spend a few minutes on kind of going through the cycle that we've experienced as a company. So being in the business purpose loan space, our business has essentially always been an originate to sell model. We're not a balance sheet lender. So we were pre-COVID originating $100 million per month in residential, multifamily, and mixed use loans. Again, $100,000 to $7.5 million in range. We were selling those products to investors of all types. So we had our retail platform where about 40% of our loans went. That was comprised of fractional institutional investors as well as individual accredited investors. We had our whole loan sale trading desk as well, where we're working with some of the country's largest institutional investors, anywhere from a few hundred million under management up to several hundred billion under management. And one consistency that we saw right out of the gate was capital markets froze up. So I think many companies such as ours realize the importance for having more of a hybrid approach to things, having some sort of a balance sheet that gives flexibility in how you run your business. So one of the initiatives that we picked up just this year really is, how do we create some sort of a hybrid plan where we continue to sell, we continue to retain our brand as a marketplace, as an originate to sell model, while still having enough discretionary capital in our control that we can continue to support our borrowers and make sure that they're not left high and dry during these more turbulent times in the market. So I think one of the shifts that we're seeing is just more, call it marketplace lending companies like ours, focusing on how to create some sort of a balance sheet to support their ongoing business. And then what we've seen also come out of this is more, I guess, like tailored or custom tailored financing programs and facilities for the larger institutions. So I think we were on a very long cycle of just values increasing, aggressive with the products that they offer. So going back to 2015, there weren't really too many players that were financing institutions that were buying this type of paper. Warehouse lending was not as prevalent as it is today, specifically in the business purpose loan space. I'm not talking about consumer mortgages. And over time, large institutions, large banks have come to accept business purpose loans, bridge loans, as an asset class in and of itself, and they've started financing that. They've moved from providing 60% to 70% to 90% leverage on some of these assets, and everybody just nobody really saw this pandemic coming, so everybody just kept piling on the leverage, as we all always do. But I think what people have realized now is that there's certain nuances in these leverage programs that just are not sustainable. So you can't build a program around having 90% leverage and having mark-to-market features and just some of the recipes that created liquidity issues for a lot of these institutional partners of ours that then later had to fire sell assets and take major losses because of it. Yeah, so we're starting to see more conservatism. I don't know how long that's going to last. People tend to forget, relatively quickly. So kind of roll back to a more aggressive nature. And there's just obvious things, right? We're seeing a bigger emphasis on technology, and thankfully we are a financial technology company. So we've been building our own software now for about 6 years. We're seeing more and more people push towards the digital experience, which honestly, up until the pandemic happened, was a little bit difficult. Real estate was just generally a very face-to-face, relationship-driven industry, and it was difficult to get people to transact over technology mediums. Whereas now we're kind of seeing that become a bigger focus. And thankfully, our loan management system was built to support working remotely. So it's been an interesting transition, but thankfully it's working out.
Well,